The Intelligent Investor by Ben Graham. In the mid-20th century, Benjamin Graham, known as the father of value investing, wrote a book that became the foundation of all intelligent investing. The Intelligent Investor was not about quick riches or speculation. It was a philosophy of discipline, patience, and rationality. It taught that true success in investing lies not in brilliance, but in temperament. The story begins in the aftermath of the Great Depression, when investors had been blinded by greed and crushed by panic. Graham, a professor and seasoned investor, watched fortunes rise and fall like tides. From this chaos, he crafted timeless lessons on how to think, not what to think about money. He divided the world of investors into two types, the defensive and the enterprising. The defensive investor sought safety and steady growth, a fortress built on sound, simple principles. The enterprising investor, more active, sought opportunity but still within the boundaries of logic and margin of safety. The cornerstone of Graham's philosophy was this: an investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Everything else was speculation. He warned that the greatest enemy of the investor was not the market, it was himself. Emotions, greed, and fear destroyed wealth faster than any crash. He personified the stock market as a moody character named Mr. Market. Each day, Mr. Market offered prices, sometimes euphoric, sometimes despairing. The intelligent investor did not follow his moods. He waited patiently, buying when prices were low and selling only when value was realized. In the short run, Graham wrote, the market is a voting machine. In the long run, it is a weighing machine. He introduced the concept of intrinsic value, the true worth of a business, based not on market sentiment but on its assets, earnings, and future potential. The investor's job was to estimate this value and act only when the price fell far below it. This gap, the margin of safety, became Graham's most powerful idea. It protected the investor from error, volatility, and unforeseen loss. To him, investing was not about predicting the future, but about preparing for it. The future is uncertain, he said, but the intelligent investor is never without armor. He encouraged a balanced portfolio, a mix of stocks and bonds adjusted according to market conditions and the investor's tolerance for risk. When markets were overheated, increase bonds. When fear dominated, lean into stocks. Discipline, not emotion, was the compass. Graham also warned against following the crowd. He called it the speculative impulse, the urge to chase rising prices and abandon reason. The investor's chief problem, and even his worst enemy, is likely to be himself. To win, one must be contrarian, thinking independently when others lose their heads. He taught humility that even the greatest analysis can fail. That's why the margin of safety mattered. It was not just a number, it was an attitude of caution and respect for uncertainty. Decades later, one of his students, Warren Buffett, called The Intelligent Investor the greatest book on investing ever written. Buffett followed Graham's principles, turning them into an empire of patient compounding. But even Buffett said that Graham's true gift was not formulas, but perspective. He taught me that investing is most intelligent when it is most business-like. Through the book's pages, Graham spoke not only of finance, but of character. He urged readers to separate price from value, to focus on long-term results, to stay calm when others panic. He believed that wealth was not built on speculation, but on stability, understanding, and the refusal to be swayed by market noise. He defined the intelligent investor not as one with the highest IQ, but one with emotional control, patience, and independence of thought. The intelligent investor, he wrote, realizes that stock prices are there to serve him, not to instruct him. In the end, Graham's message was timeless. Success comes not from predicting the market's next move, but from mastering oneself. Markets rise and fall, but wisdom endures. To invest intelligently is to live intelligently with patience, perspective, and principle. As Graham said, to achieve satisfactory investment results is easier than most people realize. To achieve superior results is harder than it looks. His words still echo in the hearts of those who seek not excitement, but excellence. Not the thrill of speculation, but the peace of reason. And in that quiet wisdom lies the true wealth that no market crash can destroy.